In today's session, we are seeing the light crude oil consolidating closer to the levels of US dollar 75 per barrel. And if we get the data, which is going to be released very soon, the inventory data for the WTI, and I think the expectations are of drawdown there, and that might propel the light crude oil well beyond these current levels, and we might even be looking at the possibility of a new swing high being created. So we will be looking for the trading opportunities in light of these bullish outlook. If you consider the data docket for the day, earlier in the day during the European trading hours, we got the inflation data for the United Kingdom. Afterwards, we got the Euro area industrial production data, and both these data points are pointing to the improvement in economic situation in the European Union as well as in UK. And I will not really go into the details of that. We have plenty of data releases for the USR, so we will focus on that. Just a while back, we got these PPI numbers for the month of June, and we have the reading at 7.3 in terms of year on year, and this is the highest since the series began back in November 2010. And that gives you the idea of the inflationary pressures which are evident in the US economy. And even if you consider these numbers in light of month on month, there also the growth is significant and it is higher than expected at 1 percentage point. So you can see that the producers are paying a lot higher prices, and they are demanding higher from the consumers also. And as I said, we are scheduled to get the US WTI crude oil inventory data, and here the expectations are that we might see the drawdown of around 2 million barrels, and this will be on top of almost 5 million barrels of drawdown which we saw in the last week. I think precisely the number was at 6.86 million barrels, so it is a lot more than 5 million barrels. And if we get this drawdown today also, the bullish momentum which has been prevalent in the light crude oil for last couple of weeks is likely to get a fresh impetus and move towards the recent high established just little below the US dollar 77 per barrel can be expected, and in course of time we can even expect the light crude oil to climb towards US dollar 80 per barrel levels. And later in the day, we also have the testimony of Mr. Jerome Powell, the chairperson of the Federal Reserve. And in light of yesterday's higher than expected CPI numbers, we will have to see what is the take of Mr. Powell on the inflationary situation in the US economy. Earlier, he had said that he is expecting this higher than expected inflationary spell to be transitory, transient, and it is likely to cool off. But for last couple of months, it has been overshooting the Fed's mandated target, and we will have to see what's the take of Mr. Powell on that. Now let's shift our attention to the technical segment. First, we will consider the outlook for the light crude oil, and after that, I will also take you through the technical formation for the USD JPY. Let's start with the light crude oil. This is the daily time frame chart, and after this steep decline and equally sharp reversal, starting close to the levels of USD 71 per barrel, we have the light crude oil showing the bullish bias, and for last couple of days it has steadily climbed. The gains have been incremental, but the direction is same direction has been upward, and in today's session also, after making a low close to USD 74 per barrel, we have this fresh move on the higher side, and it looks likely this multi-year high established just a week back is likely to be retested again, and that's what we are counting on. So for that target to be reached, today's crude oil inventory data is going to be of high importance. We will have to see what kind of release is there, and depending on the drawdown or for that matter addition in inventory, we will see the prices move. So if we want to trade, I think we should, of course, wait for the light crude oil indicator to be released, and looking at the jump on either side, we can make our assessment and get involved for the new opportunities here. If we consider key technical levels, we do have these resistance around the USD 76.3 per barrel level. We have the first resistance of this month's pivot point series, and also the prior swing high is close by. So we have these two technical parameters which are likely to throw a hurdle in the light crude oil's path if it is to move higher. And if you consider the regression curve, it has flattened to great extent after the price action has gone sideways, and there is a steep decline starting close to 77 and extending all the way to 71 has also impacted the regression curve for the light crude oil. And now that we have this price action back in upper band, I think this decline, which was getting evident for last 2 3 days, is likely to flatten out. And if we don't really see any fresh move back below the USD 73 per barrel, I think in next couple of days it might even start to incline on the higher side. But for that, it will be important for the light crude oil to get past this immediate resistance, and if it is able to successfully do that, then I think the next target will work out toward the second resistance, and the move towards USD 80 per barrel is going to be pretty much on card. So if you want to go for the trade in today's session, the price zone around this confluence of three key SMAs is going to be a key determinant. We have these three SMAs converging close to USD 74 per barrel level, and this is where the light crude oil also made a reversal after this decline just a few hours back. And if you consider this prior price formation, we have these immediate swing lows, and the lows have been higher. So you can say the formation has been of higher highs and higher lows on the lower time frame charting. And if the light crude oil this time around also makes a high beyond USD 75.5, then that will be in a continuation of its bullish stance for last 2 3 days, and we can be fairly confident, fairly hopeful of the continuation of the same. So this is the price zone which is likely to provide the support in near term for the light crude oil, and that's why I think we should try to get involved for a long trade as close as possible to this conversion zone, the 200 SMA range of around USD 74.2 to 74.5 per barrel, and this will bring us the risk reward ratio in favorable terms. We can keep the stop loss just little below the prior swing low. I think the stop loss anywhere close to USD 73.5 should be good enough. And on the higher side, as I said, we can expect the crude oil to go on to touch the USD 77 per barrel level. So that is going to get us the risk reward ratio of even better than 1 is to 2. Now, moving back to the currency segment, we will see what's happening in the USD JPY. In last session, I had talked about the continuation of the bullish trajectory for the USD JPY, and that went well for yesterday's session. We had the USD JPY jumping higher after the release of the consumer price index data, and it was on the higher side. The CPI was at 5.4%, and that propelled the USD JPY higher. But after getting close to the levels of 110.7, the USD JPY struggled to maintain the gains, hold the gains, and now it has reversed, and most of the yesterday's gains have been wiped out, and it looks likely that this failure is going to impact the near-term trajectory of the USD JPY, and we can expect the USD JPY to get back toward these immediate swing low on the daily time frame chart, which is there around 109.5. Of course, that might take time. It might happen in today's session. We can't really be sure about the time, but the direction seems to be changing. And in light of this, we will have to change our stance accordingly and start looking for the shorting opportunity. So if you want to get involved in today's session, I think this central pivot point around 110.5 is going to be of high importance. As long as USD continues to hover below it, we can continue to target for the new entries for shorting the USD while keeping the stop loss closer to the immediate swing high established around 110.7. On the lower side, as I said, we can expect the move towards this immediate low. So that is that price level is close to 109.5, and that means we have fairly good chance of making money here, and also the risk reward ratio looks good enough to me. So these SMAs, two SMAs, the 200 SMA and 50 SMA, which are converging close to 110.5, can be utilized to act as our area of entry. The price zone of around 110.5 is going to offer us the excellent choice in terms of risk and reward. And we will have to be a bit cautious here as we have already seen this steep decline. So in today's session, it will be a bit difficult to expect the continuation of the similar move in later hours, but we have to watch out for the key levels which are going to help us in keeping the stop loss fairly sharp. So, in light of that, the move towards 110.4 or thereabout should be considered as a good opportunity to go short, but of course, after due consolidation, while keeping the stop loss closer to this immediate swing high. And on the lower side, the move towards this prior swing low 110 and even beyond that can be expected. So that's my take looking at the current price formation of the USD JPY. If any of you have any query or any idea to share, you can write to me in the feedback section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument and one should be careful while using the information provided. You can also check out the Ducoscopy Analytics page for further coverage of the market development. If you want to start trading, the J4X platform can be downloaded and installed in few easy steps. If you have any query regarding that, you can write to me in the feedback section, and I would be more than happy to help it out. And on the social media, we are available on the Facebook. You can follow us there. Thank you all for joining in. Have a fabulous day ahead. Goodbye.